Hello everyone, it is Evan from the Trade Risk on Wednesday, July 22nd here with a market recap video. We are first going to analyze the health of the current market. We're going to look at some other markets, some leading sectors, individual names, and then finally some trade ideas for the rest of the week. Now today is the big day. It is the webinar that I am hosting. It is happening in a few hours at 7:30 p.m. Eastern. If this interests you, thetraderisk.com/webinar. I'm going to go over a few topics: how I analyze price action, how I find my trade setups, how I position size and manage risk. It's basically an insight into my day-to-day process and what I do. So it's entirely free. Drop your email address here. I'll send you a link. If you can't make this time, if you still sign up here, I will send you a recording of the event so you can still replay it on your own time afterwards. So very excited. I feel like I've been talking about it for a while, and I'm excited to host that later this evening. Now, getting into today's action, we had some continuation to the downside here. We've been in this, now it's a 3-day pullback off of the highs here from above almost 213 that we made basically on Monday. Now, the important thing to note is that while we are in the midst of this 3-day pullback here, the buyers did step in a little bit today. We didn't just roll over, and we also are still above all of the fast moving averages. We tagged the AEMA today. We closed slightly above it. That's very constructive action. Again, if you take a step back here and you look at where we've come from, last week we had this really strong move, fast move, holding support off of 204.50. We broke above 208 and we ran straight into this 212.50 area. So that's a very bullish move. It happened very quick. You'd expect that this overhead supply would be a difficult level to get through. Now that we've had a few days of a pullback here, this is where it gets really interesting to see, is this going to hold roughly here, another day of sideways perhaps, or are we going to in fact roll over, give up these moving averages, perhaps even fill this gap down here at 208, and then just continue in this messy range? So that's where we're at right now. I think it's a very, I'm looking at this as a glass half full scenario. We're still holding pent up. And we're still have the edge to the bulls, in my opinion. Now we need to see them kind of reignite their effort here. We haven't seen it just yet. We didn't quite see it today. Perhaps we need to get through earnings season. There's a lot that the market's kind of digesting and going through right now. So we want to see when that strength will return to really get more excited on the upside. At least that's the way I'm playing this market. So ultimately, I need to see this 212.50 taken out, and that would obviously get me in the very bullish camp. Now, if we look at the other markets, the other indices, the IWM, for example, the small caps, this index is actually lagging just a little bit. It's already given up about 30% or so of last week's move. So a little bit of underperformance there relative to the SPY, but again, as long as it holds above 123.50, I think that's constructive. It did close green today. Let's see if it can add to those gains tomorrow and make another run against 126.50. And then of course the Qs have been the leader over the past 2 weeks or so. Broke out of its previous range, these previous highs here from May and June. We broke out very strongly. Of course, today was very weak given the poor performance out of, mostly Apple and Microsoft, which I think are the top 1 and 2 holdings of the NASDAQ 100. But we did fill this gap today. Notice, even with today's weakness, down 1.13%, we still didn't even tag the 8-period exponential moving average. So you can see that gives you a good gauge of how pent up we still are in this index. So definitely where the leadership is here. We want to focus on this. Let's see if tomorrow we can get some more bid or to reclaim a bid here out of the buyers and try and continue higher here, or at least stabilize us. Those are the clues that I'll be watching for. So overall, I think for market environment, I think you got to be optimistic at this point. You got to have at least some type of bullish tone. I know that the internals have been not so in line with perhaps the recent move. In other words, there hasn't been as much participation as we would have liked to see in an ideal situation. But again, while we should take note of it, let's not get overly concerned yet. Price again is certainly the first leading factor, and then the internals and the market breadth and support are something that we definitely want to keep an eye on, but we don't want to go too crazy until we see price confirm what the internals are showing. At least that's the way I look at it. Now let's get into some other markets here. TLT, nice day today, trying to break out of this range that it's been in, 119, 120. Let's get some continuation tomorrow above that level. Maybe we can put this little bit of a range, the short-term bottom in the past. It's yet to be seen. It's been a lot of dancing around these levels, so let's see if they can do it. USO got hammered again today. Ever since this gap down here, we've been just racing to the downside. We are at an interesting point, so here is where we need to see if the buyers are going to step in again. This is effectively the lows back here from March, and now that price is getting back to those levels, we want to see, are they going to step in again, or is this going to turn into one big continuation pattern to the downside with a new leg lower? That's yet to be seen. I wouldn't want to be long this just yet. You gotta, in my opinion, you just have to wait for some evidence of some stabilization here before you start getting interested on the long side. UNG, now this is something that's a little more interesting on the long side. It's developing a nice tight level of resistance here, right around this $14 level for the past week or so of trading. You can see it's halted price, but price has stayed very contained right underneath it. So I like that tight action. I would be interested in a trade, in a breakout trade above $14. The downside is, if you look to the left here, you're still in this larger, choppy, larger range, and that, it's just not that desirable. So if you're nimble, if you're quick, I think above $14 would give you some momentum boost above here. I think it's something worth watching. But again, you just got to realize the context, sort of the playground that you're in if you take that trade. The metals have been getting clobbered. Gold, while the bulls did try and step in today, it's still very much racing lower. It might be worth an oversold bounce here, but again, now that it's below all of the lows here from earlier this year and the end of 2014, doesn't seem that interesting. It looks like the sellers are in control, so I would want to avoid that. Silver, same thing. Not quite as overextended, but broken down from this recent range that it was in for multi-months, and that can definitely lead to a sustainable leg lower. So I'd want to avoid the metals here until they can prove themselves, and I think that's that. Now looking at some other sectors here, some leading sectors, biotechs continue to be where a lot of the action is. They started off the day pretty poor. Bulls got that rally in today, closed just slightly red, but still very constructive, holding above the 8-period moving average. This is where a lot of the strength is. Again, healthcare here. Another sector that's really strong, going hand in hand with biotech. Financials breaking out today, which is really constructive to see. Closed up almost 1%, taking out resistance. That's a really good sign. And then finally, consumer staples. Again, trying to leave this almost, 8-month range or so in the past. So again, very constructive there for the staples. Now let's get into some individual names. We'll start with Apple. Of course, they had earnings yesterday. They were not perceived as favorable earnings or numbers, or perhaps the expectations for next quarter, whatever it is. We saw a gap down today. Now it did close on the highs, which was constructive. I mean, there's a few things here. I think 122 is a great line in the sand now. This is the lows from today, and I think if you wanted to be long Apple, it wouldn't be a bad area to put a stop loss against. It does have some, it should have some meaning there, given it was the reactionary lows of today's opening gap from their earnings. So I think that's interesting. I also think that Apple could just be kind of a lost quarter coming up for it. I wouldn't be surprised to see Apple just move sideways here for the next few weeks, probably fill this gap, but then just maybe move along sideways. I'm not trying to predict anything. It just doesn't seem like, for my style anyway, I'm going to get too much of an actionable trade out of Apple anytime soon. Obviously, that could be wrong, but we'll see. We'll just have to see. But for now, bulls tried to at least stabilize it. Let's see what tomorrow brings. Google, of course, had its monster move to the upside off of earnings. I think this one just needs more time. Of course, the candle today wasn't too pretty, but unless you're, really short-term trading this, I think you just got to at least give this another week or so to settle down and see what happens. Let the fast-moving averages catch up. For longer-term players, I don't think there's too much to look at there for new setups. Netflix, kind of the similar camp here. It's getting a little tight. Let's see if this can continue to tighten up here for the next few days to a week. Maybe that gives us something, but it's above all the fast-moving averages. Still needs some time. Amazon, same exact thing as Netflix, although this has earnings coming up pretty soon, I believe, so that should be an interesting one given how much this run. But not too much to say about it up here. Tesla. This one ended up tagging the all-time highs up here right around 285, almost the all-time highs from 2014. It got a strong reactionary move off of it. I know it had some downgrades. Let this settle in here. I'd love to see this go sideways for a week or two, get tight, and then eventually get a breakout trade above 285 to new all-time highs. That would be my ideal situation, but we'll have to just wait and see. It's pretty sloppy here, and earnings, I think, are coming up. Same thing with Facebook. A lot of these tech names, these big tech leaders are in the same exact formation. They all have run quite a bit over the past week or two, and all the fast-moving averages are racing higher. This one, again, same thing. Needs time. Don't see anything out of it. Twitter, this one does have a tight pattern, but has still yet to prove that it can take out a resistance level. Now, I think earnings for this one's the end of next week. I'd love to get a trade above 3670 or so. If bulls can really show some commitment here, break above a resistance level, strong close, maybe it runs into earnings. Otherwise, I think this one's just asleep until we get that earnings catalyst. It's trying to hold on here, but we'll have to see what happens with earnings coming up. Now, Alibaba, this one had a nice day as well. Recently, it's reclaimed this $81 level. That's very constructive. I think now, if you look to the left here, though, you still have a lot of supply to contend with. Needs to get back above $87. It's got a lot of work to do still, but I like that it's above $81. Let's see if it can hold there and set something up for us. GoPro, finally, last name here that we're going to analyze. This one's looking good. Holding this gap up, moving averages are racing higher. I think as long as this holds, a high level hold here is $60, which would be today's lows. If it can continue to do that and work itself sideways, I think this one is back in play on the long side, and I would love to look for some setups coming up in it. Now, some names coming up, some trade ideas, for the rest of the week coming up, long ideas. First is OPK. This one, I like this clean level of resistance here. It rolled over from it the end of last week, and actually really mostly this week, Monday and Tuesday, we got that pullback, and then we saw a nice bounce back, almost 4% today. Let's see if we get some continuation above 1690. Basically, today's highs could be a nice little trigger for some further upside there. TIF is another one. I talked about this one yesterday. Nice strong close today. 94.50 was the resistance level we were looking at. It's been banging up against it for quite some time. Big open gap to the left. Let's look for continuation there. I like what TIF looks like. RAD, Rite Aid's another one. $9 or so. That's a resistance level that's been holding since April. It failed there twice before. If you look at a weekly chart, this one's really been on a steep incline. It was down at $4 or $4 and change back in late 2014. So it's had a really fast-paced move here on a weekly chart, but the strength does seem to be there. Let's see if we get a trade above $9. That one could be interesting. And then finally, KAR. This one not quite ready just yet, but just want to put this range on people's radars for a breakout, perhaps above $38.60. I think that one looks pretty good there, although probably needs at least another few days, maybe another week or so, but it's something to keep on your radar. So that's all I have for today. Thank you for watching. Again, if you are interested in the webinar today in a few hours, thetraderisk.com/webinar, drop your email, sign up. Very excited about it, and should be a lot of fun. So thanks for watching. I will catch you next time.